Well, I have observed that we're trying to stay on a tight schedule, so we're going to go ahead and get started. This session focuses on funding small business growth. As entrepreneurs and small business persons, we know that growth is essential to the long-term success of our organizations. However, many small businesses struggle to obtain funding and the funding necessary to expand their operations. So this panel of experts today is going to talk about their insights and experiences on how to finance small business growth. I'm going to introduce the panel, after which we'll jump into the discussion. We have some prepared questions, of course, but hopefully we'll have some time for your questions. My name's Ken Smith, and it's my honor to serve as the Dean of the McLane College of Business at the University of Mary Hardin-Baylor. I've taught business for a lot of years, since earning my PhD from the University of Maryland. While there, I had opportunity to serve as the university's director of the university's Small Business Development Center, and I taught the strategy capstone to the small business students. Spent 14 years at Syracuse University, 11 years at Geneva College in Western Pennsylvania before coming here in 2015. Fun fact, although I was born in Pennsylvania, my maternal grandfather was born in Waco. His last name is Moody, so I claim Texas roots. We have 6 grown children. My wife and I live in Temple. We have 8 grandchildren who unfortunately are all still up in the Northeast. Art Coley is the CEO of CGI Franchise. He's been passionate about small business ownership since he was 15 when he opened the French Quarter Cafe, hamburger stand here in Temple. Since then, his various career endeavors have been centered around making small business ownership accessible for entrepreneurs worldwide. His passion for working with franchise brands in development, recruiting, and onboarding has made Art a top franchise development professional. Fun fact for Art, he was starting quarterback for the Wildcats back in the day, and now is the announcer at Friday night home games. He lives in Temple with his wife, Jean. They have 3 sons, 1 granddaughter, and a dog. Jason Collier. Jason is an executive vice president and senior lending officer with Extraco Banks here in Temple. He spent 15 years in banking with 12 years in agricultural and commercial lending, holds an MBA from Texas A&M, and will graduate from the Southwestern Graduate School of Banking at SMU this June. He's an alumnus of Leadership Temple, currently serves as the treasurer for the Ralph Wilson Youth Club, treasurer for the Temple Area Builders Association, and is a member of the Temple Rotary Club. He's a 5th-generation Bell County resident, lives in Troy with his wife and 3 children. Fun fact for him, he coaches his son's Little League baseball team and enjoys tinkering with hot rods. This sounds fun. Finally, Jason Ehler. Jason is a business advisor at the McLennan Small Business Development Center, where he's been serving since September of 2013. He provides counseling and training to small businesses, works with the Small Business Administration to develop and provide informational tools to support business startups and existing business expansion. He has over 20 years of experience in the customer service industry, including 14 years of management experience in the medical industry, technology, financial industries. Of interest to this audience, he has extensive experience in lending, strategic planning, client development, sales, marketing, coaching, and organizational development. Fun fact, on weekends he hits the open road on his bike to feel the wind in his hair. I can relate to the bike, but not the hair. Jason's a graduate of Leadership Waco and an active member of the Temple Chamber of Commerce. So we're going to jump right in, and you didn't come to hear from me. Art, let's start with you. What are the most frequent challenges that you've seen small businesses face when they're seeking to access capital for funding their growth?
Yeah, and to a little bit of context, our business, CGI Franchise, we work with franchise companies, brands, 15 currently, and we help them find new franchisees, quality franchisees that fit the profile of what they're looking for. So collectively, the brands that we work with in the last 12 months have had 15,000 people reach out to them to raise their hand and say, hey, I'm interested in learning more about Christian Brothers Automotive or Urban Air Indoor Theme Parks. Those are some of the brands that we work with. Pillar to Post Home Inspection, We have brands that have a $3 to $5 million investment. We have brands that are under $100,000 investment that are SOHO. You can work from a small office or home office. So just trying to give some context, Ken, to the question that we see a lot of situations where people are looking for funding and access to that capital for their business, very wide range. Here are the three biggest challenges and there's a fourth bonus one there too. But I think about, for me, like Renee, I heard you mentioned earlier, you're a veteran looking for, what might you do as a small business owner in the next chapter of your life. We get a lot of that. And the things that I see is one, a lack of understanding and education of funding and finance, first of all, just how it works. It's a big difference between consumer lending and small business or, or commercial lending. The second thing is understanding your true financial needs. Like Ralph Sheffield and I were in the restaurant business. We know if you're starting a restaurant, you better have a lot of working capital, and you also better understand your personal financial needs, because that has to figure into the formula. If you're leaving corporate America or you're leaving a job, how does that fit into? So that's number two, is really understanding what dollar amount do I actually need to have a chance to be successful as a small business owner. And then another big challenge, Ken, that we see a lot of people that are thinking about, man, how could I achieve self-sufficiency and financial independence and the goals for myself and my family? How can I do that through small business ownership? One thing is, get your personal financial house in order. I see so many small business owners that have a good idea and the work ethic and all of these things, and they just don't understand the connection. Not so much in big business, but in small business, that connection between personal financial discipline and systems and ongoing how you take care of that carries over into your small business. And that fourth bonus is not really, Joyce, you and I just talked about this, about your scone business. And I just asked her, I said, why do you want to do that business? Why do you want to start a business? I see a lot of people thinking about small business, but not really clear on their why. Why are they doing it? And that's going to pull you through a lot of things and hurdles, and even including the hurdles of trying to get access to capital. But again, that's off the top.
Thank you. Jason Ehler. This is going to be fun. Jason Ehler, same question.
Yeah, absolutely. One of the challenges, there's basically two sides that I work with business. One being the startup. And you're going to be considered a startup for the first, until you can produce 2 years of financials, basically, completed 2 full years of business. As a startup, what's critical to be able to overcome is having a solid business plan. What lenders typically want to see is a strategic roadmap of who you are, what you're going to do, how you're going to do it, and backing it up with all those financial projections, which is going to be your cash flow statements, income statements, and balance sheets to show financial health of, what are your expenses going to be, what do you expect your income to be, to ensure that you can service all your debt responsibilities and fixed expenses. But prior to that, too, it really is going to come down as a startup to credit scoring. The old adage, how you do one thing is how you do everything. If you don't have your personal finances in order, why is a lender or any investor, anyone that's going to provide you some capital or funding, why do they think you're going to do this differently than what you do at your home? Some rules of thumbs for lending, especially, and I'll let Jason speak on some of this a little bit later too, is, typically when you're trying to get funding, a big roadblock is having collateral or capital, cash on hand. Lenders typically will not give you 100% of what you need. They're not going to finance you having a job or you having a business. They want to see you have some type of risk in the game. So that's one thing. Now, as a business evolves and they become an existing business after that 2-year mark, the challenge is going to become cash flow. Cash flow kind of dictates, can you take on more debt and still bring in enough revenue to service that and grow the business?
Great. We teach our business students that businesses generally have 3 primary ways that they can fund growth. Retained earnings, you're taking your profits investing it back into the company. Some form of debt, loans, mortgages, or credit, and equity, where you trade a portion of the ownership in the company for investment capital. Jason Collier, in your experience, which of these three do you find most promising for small businesses and why?
Well, I'd say kind of like what I tell my kids, any one thing, too much of it is probably not a good thing. So usually that has to do with ice cream. But you know, as far as small businesses go, you can bootstrap that business and grow just organically with your retained earnings. There's a set of problems that come with that. You know, things just happen slower. It just takes more time to get things done, to build up more capital. You can get yourself into some cash crunches where, you know, you're trying to pay payroll and you know, just the day-to-day of the business. Whereas utilizing some financing may allow you to, you know, streamline some of that as far as your accounts receivable, your accounts payable, the bills that need to go out. I've seen, you know, plenty of folks that have this fantastic idea and they've been in the industry now for 10, 15, 20 years, but they just don't have the capital. They don't have the cash to get the idea off the ground. Or even, you know, coming straight out of college, you know, they've got a great idea and they just haven't had the time to be able to build that up. So that's where strategic partnerships come into play. You know, for somebody to come in with the cash to be able to either get the business off the ground, get it going, or just to be able to add the strength to that deal to make it more appealing for a lender to say, hey, this looks like a good deal. We've got good backup here from this other partner, and we feel confident in that financing. So a good mix of all is probably not a bad thing.
Art, let me ask you the same question.
Yeah, just one of the franchise companies that we work with, which most franchisors are small businesses themselves, but the founder of the company, she and I were talking, and she was looking to raise capital. For me, it's real simple. I want to try to do everything out of retained earnings and fund my growth internally, create that cash flow. Obviously, if you're a startup business, you know, there aren't any retained earnings when you're trying to get the business off the ground. So, but if you are an existing business, really, you know, fight and scratch and do the best you can to invest in your business out of your own profits and cash flow in the business is my opinion on that. Number two would be debt, and a very distant third is other people having equity in my business. You know, they're especially in the early stages when there's so many routes and directions a small business can go. And I mean, I'm not talking about businesses with $10 million of EBITDA. I'm talking about small business that, you know, maybe a few $100,000, certainly under $1 million of EBITDA is, you know, do your best to do it out of your retained earnings and debt. And I'm just not a big fan of getting a whole lot of other investors. And that's an opinion. But that's from what I've seen over the years.
A lot of us are in small business because we want to do our own thing. And as soon as you bring in other investors, you're doing their thing.
It's often done way too early, in my opinion.
So, Jason Ehler, you've worked with people to help them find financing. What kind of loans are available to small business folks?
Well, sure. As far as your traditional lending, which is your standard commercial loan, those are kind of, you know, set terms, typically up to 5 years for most of those type of loans. It's kind of based on what it is you're financing, the life, whether it's equipment, furniture, fixtures, those type of things. So that's done through just traditional bank channels. Lots of good community banks in the area that do business funding. So one thing that the Small Business Administration does is they assist with kind of offsetting and making it easier, especially for a startup, to get funding. What the Small Business Administration does is they assist with giving a guarantee for the lender. So typically it's not something that you as a business owner would do is go to the SBA to do funding. It's the lender that's going to reach out to get that guarantee. And while I was networking earlier today, I saw that Mr. Herb Austin, who is the district director for the Dallas-Fort Worth SBA, is here. So he has a location on the backside that I would encourage everyone to speak with to see what they can do to help. But outside of, you know, your traditional lending, you know, there's lines of credit which typically are for short-term funding, whether it's inventory or some equipment or just something you have to spread real quickly to, if you don't have that cash flow to work with. Outside of that, there's some companies that do factoring, which are basically where they fund you based on your invoices to give you, again, some of that cash on hand. And I don't know, most people have probably heard of crowdfunding. It's not your traditional funding method, but it's where you use a group of people, typically on an online platform. There's like GoFundMe, Kickstarter, Indiegogo, a bunch of different funders out there, or I should say platforms out there, where you're utilizing your network to build some capital that, typically what you're going to do is offer them some kind of a reward in return. So that's the big main channels that I typically help people work through, as well as there's CDFIs, which are Community Development Financial Institution, and what they offer are microloans. And microloans they're what they are is nonprofit lenders that typically help startups, sometimes a little bit more risky side of business. They get funding through some Small Business Administration funds, as well as CRA, Community Reinvestment Act, through other lenders, and they work with startups, sometimes the underprivileged communities and historically underutilized type businesses to help with funding. And we have some in Austin, is who I typically use, like People Fund, Lift Fund, as well as business community lenders.
Great, thanks. Let's talk to our banker for a minute, Jason Collier. Can you give us a crash course on how a commercial loan works, how it's different from say a consumer mortgage or things that other people might be familiar with?
Sure, absolutely.
Sure.
So most people are used to their home mortgage. They're used to a 30-year fixed rate, and a lot of time they'll come in the bank and say, okay, I'm ready for a commercial loan, and where's my 30-year fixed rate? Mm-hmm. And we get to have a real short discussion about how things are different in the commercial world. The main difference is whenever you get a home mortgage, that home mortgage gets sold off to another financial institution, typically in hundreds or thousands in investment blocks. So basically, that bank that's originating that, or the mortgage originator's not taking on a whole lot of risk because it's just out the door after it's been booked. And that's why you get a new statement at some point in that mortgage that you've had that says, hey, you've got a new provider. It's because that's been sold at some point. So on the commercial side of things, there's more risk because the bank is keeping it in-house. They're keeping what we call the paper in-house, the note. We get to service it. We get to monitor the loan. We also get to collect it when things don't go right. So that's the big difference, is there's more risk in it. And so because of that, typically I'll tell people there's three things to know about a commercial loan. Typically you've got your amortization. That's a big word for how many payments are we going to calculate over. You've got your term, which another word for that is balloon maturity. That gives the bank a chance to reassess the credit, make sure everything's going correctly, and then make a decision on if they want to renew that credit. And finally, you have a fixed rate term, and that's how long your rate is fixed for. So typically that's a 5 to 10 year, and it aligns with that balloon maturity. The reason for those, again, being a little bit more aggressive terms is that there's just more risk involved with it, and so the bank has to measure those and meter those risks.
We've already heard that your personal credit and the way you handle your own funds is important. What other kinds of things or what factors do lenders typically consider when they're deciding to lend to a small business person?
Sure. So my first day on the job as a lender at Farm Credit, the chief credit officer found a cubicle, and there was like a little bit of space behind it where the brooms were. And he set me up back there and he said, here's some financials and I want you to underwrite this loan. And at that point I had no credit training at all, no financial training. And what I learned that first day is there's a thing called the 5 C's of credit. So you can spend days going over the 5 C's, but I'll do it real quick. Basically, whenever people think of credit, they think of credit score. When bankers talk about credit, we talk about it as a holistic thing. We talk about the credit as, is this a strong credit, is a weak credit, and what makes it that. So the 5 C's of credit are capital, collateral, capacity, character, conditions. So in a high level, again, capacity, we want to know that you have the ability to pay the loan back. If I give my kids, if my kids give me a loan for $10, they ask, hey Dad, how are you going to pay me back? It's pretty simple. The second is the collateral. We want to make sure that if for some reason we do have to take that collateral back, that the bank's not going to lose money. So that's why you generally have down payments and equity injections into your collateral. Your capital, we want to know if for some reason, as Rod said earlier, small business doesn't always go in an upward trend. If for some reason there's a downward trend or a dip, that you've got some cash reserves, you've got a rainy day fund, basically to tide you over during those hard times. Character, that's going to be, your credit history. How have you performed with other lenders? What type of report card do you have? And then conditions, that's, how have we conditioned that loan to make sure that we're monitoring it correctly, making sure that we get early warning signs if for some reason something's going the wrong way. So that's crash course in lending. Yeah.
Art or Jason, you want to add anything to that? Is that?
Go ahead, Jason. No, that's exactly what it is. When covering those 5 C's, the character is so critical. And a lot of things that people will often overlook on character is your actual experience. When you're trying to get a commercial or a business loan, you need to have some sort of experience so that a lender or your investor is going to see that, hey, I'm pretty confident that if I give this guy some money, he's going to be able to do whatever he needs to do. He's going to have the experience and knowledge and know-how to make it successful.
And Ken, I would just add that I think a lot of wannabe small business owners maybe overcomplicate some of this stuff around funding and finance, and it's not my background, it's not my degree, and we're super fortunate in this area. And I know that because I've done a lot of small business work across the country and even other countries. We've got a lot of really good resources around here, people like Jason and Jason's that can talk with you and help you understand. You focus on what it is that you're wanting to do in your business and understand, right, Joyce, what that value proposition is with your business and how you're going to do that with scones, or Renee, whatever business that you decide to move forward with. Know your business, know what you're doing, how it's going to work, because the one thing also about commercial lending that's different than consumer is that, any of the existing business owners know in the room, sometimes our FICO scores are just yucky. Because as a small business owner, I got to personally guarantee everything that we do, and Gene and I's credit scores haven't always been great, depending on sometimes where the business is in terms of what our signature is on. Commercial lenders understand that, and it isn't just about. Because the flip side of that is, I told you 15,000 people reached out to us last year. 300 of them qualified and started a franchise. That's about 2%, Brian, if I think I got my math right on that. So 98%, some version of it wasn't a fit or didn't work for them or they didn't qualify. And so on the commercial side, I know that our local banks have loan committees. They still exist. And there's a human decision that can be made. There's still the minimum things. It's not just, do I like somebody or know them from church or this and that piece. It's a lot higher level standard than that. But there's a more human element to it in understanding who you are, how well you know your business, what is your strategy. Do you have an A team and a C plan, or do you have a C team and an A plan? Which is it? But that's the stuff that will sometimes frustrate small business owners trying to get that capital for growth or to do a startup. But I really want to just make sure in my opinion, you don't have to be a lending expert. Don't try to do that. You utilize the people that know that and can help you guide. Focus on what it is you're trying to do. And if you've surrounded yourself with the right advisors and you're humble enough to listen and seek that advice, then they'll help you with the best way to capitalize it and making sure you don't make some big mistakes like financing something that should be financed short term with a long-term note. I've learned that lesson the hard way over the years, and it's a simple thing, but the right advisors and people in your group will help you with that.
So there are commercial loans, there are other sources of loans, the SBA, CDFIs. It sounds like however we approach these folks, there's some things we just have to do before we get there. So Jason Ehler, why don't you start with us and say, what should a small business owner do before you sit down with a potential funder?
Well, the key to really convincing a lender to fund for your business is being prepared. I can't stress the importance of having a business plan, having your projections showing what you expect to happen, how you're going to overcome those challenges if something doesn't work out the way you anticipate or hope. Really, when creating a business plan, being realistic as well. Again, going back to the credit or character piece, if you go in with some financial projections or numbers that are not good or accurate, a lender's going to see right through that, and there goes your character. I mean, part of the 5 C's are already degraded as far as what you're going to be able to achieve of trying to get some funding for that. And then, when trying to get funding too, going back to kind of like a retail or a personal loan, it's a lot more cumbersome. So you have to be patient. We just talked about having a lending committee review to approve it to see if it's going to be good for the bank, and that's the last step of the process. So it's going to have to first convince the lender to take a chance on you, and then pass through the underwriter with those numbers, like I was just explaining, to make sure that, this could be a viable, good business and could succeed long term. So, realistically, I very seldom see loans close on a commercial loan quicker than 30 days. So it just takes time. It's a matter of being patient and being prepared and being able to explain how you're going to achieve and work through the external environment.
Jason Collier, let me ask you the same question. What do you need to do before you sit down with a...
Yeah, I'd say planning is a big piece of it. A lot of times, one of the biggest turnoffs that we have is people come in and they'll ask, hey, I'd like to get a loan, and we go, great, how much do you need? And they say, I don't know, how much can I get?
Right.
And that's one of the first things that we don't like to hear, because we want you to have a plan in place to know, okay, well, based on my projections, this is going to be my burn rate for the first couple months. This is how much I need to have in reserve, and this is what I need to get the job done. So the planning is just a huge, huge piece of it. And like Jason said, with your financial projections, we understand it's small business. We understand you're getting off the ground. We don't expect in the first year that you're going to make a huge profit. That's one of the things that we typically see with people that haven't done projections a lot, is they think, man, I'm going to start this new business and I'm super amped up about it, and I'm going to make, $200,000 net profit that first year. Sometimes that does happen. It's a little bit more rare though, but we definitely understand, the struggle that small business owners go through in getting ramped up.
Right. We do want to wrap up so you have time for questions from the audience. So let me just go down the line real quickly. What additional advice would you give to people who are seeking funding or capital for their business?
I would recommend using your resources. The Small Business Administration puts out a lot of good resources for help. There is the Small Business Development Centers, whom I work for. I cover Bell and Corio counties. I office on Temple College. So I have some cards in the back. If you would like to speak with me, I'd be happy to help. But there's a lot of other organizations too, such as SCORE, which are retired executives that help. And all these services are free for you to utilize. I saw there were some veterans here. There's Veteran Business Outreach Centers. Your chambers are awesome resources. So do your due diligence, get help that you need, so that when you do go speak to a lender, again, you are fully prepared and able to answer any questions that they may have about what these funds are going to be used for. Having a good breakdown, use of funds is what the term is for a lender. They want to see exactly what those funds are going to be used for, so that you're getting exactly what you need.
I would say to build your team. That's something that a lot of people overlook. So, depending on the business that you're going into, your team may look like your real estate agent. It may look like your accountant, your attorney, your banker. The business is a lot about relationships. So make sure that these guys, know each other, that they've dealt with each other before, that they have confidence in each other's ability. But, something that I've heard Dave Ramsey say is find you somebody that has a teacher's heart. So, if that's a financial advisor, if it's a banker, if you've not done this before, find somebody that wants to teach you and wants to help get you connected with the team that you need to be successful as you build your business. And like you said, there's plenty of resources out there. Our chamber is fantastic. Rod is just an all-star at getting people connected. Extraco, we've launched Extraco Link in some of our markets, and that gets you connected with all of these types of resources and people that we deal with. So there's lots of resources out there. So just make sure to tap those resources and build your team.
Great, thanks.
Yep.
Art?
Yeah, just echo exactly ditto on the resources. I was thinking about, Gene and I still use the SBA today in our business. We have an SBA line of credit. We probably had, a half a dozen or so different SBA financing deals over the years with our business. So it doesn't stop. It's not just in the beginning. As your business is growing, those advisors that you talk about, everybody ought to have a banker or bankers, an attorney, an accountant, some kind of investment advisor. Brian Daniel does that for me. I mean, Brian Daniel sits down with us quarterly to say, are we on track for what we want for accomplishing our own financial independence and where our business fits in that. Have those people there that will help you, and you don't have to be big to get that. They'll find people to grow with you. The other sources, yes, I'm in franchising, and so some franchisors actually provide financing and funding or tools for that, like Christian Brothers Automotive, the one out in West Adams. They buy the land, they put the building up, even guarantee the SBA loan for the new franchisee. So there's some programs there. Number 2 is 401k and IRA funding. A lot of people don't know that you can use your retirement funds, 401k, qualified accounts, to start a business. There's some things that have to be done. It's legal. It's not illegal. It's legal, approved by IRS. But that's a channel. A number of people coming out of a corporate America may have hundreds of thousands of dollars sitting in a 401k. That can be a good tool for starting a business. And then the third one, I'll just go back to in the personal financial piece. We had an old boy here recently that wanted to come on with a franchise company, good income, all this other stuff, great 800 plus FICO score. The problem was it was costing him and his family about $15,000 a month to fund their lifestyle. And when we said probably the only way you're going to get approved to get a franchise is you're going to have to drop the country club membership, tell the kids after the semester's over they're going to come back and go to a cheaper school instead of some big private high tuition school, and all these other things, sell a couple of the cars. Do you really need a 6,000 square foot house? What do you think happened? He's not getting in small business. That because he wasn't willing to do what it takes, and that's that last piece. If you aren't willing to do what's required to be a small business owner, then not everybody's cut out for it. Just the fact that you're asking about it says something about your courage and the belief in yourself, because it will be a lonely, hard walk a lot of the time. So these kind of things, stack the deck in your favor with these resources and tools that we're talking about here today. Don't make it any harder than it already is. And oh, by the way, it's beautiful. I'm so proud. Small business ownership has changed mine and my family's life. So bravo, anybody looking for that and pursuing it.
Great, thank you. We do have a few minutes for questions. You're welcome to direct them to somebody here. Yes.
I work for the Greater Collier Chamber of Commerce, and I'm kind of like Jason. I'm a business counselor. We do refer some people out to him for business plans, so thank you so much for that, for assisting them. As far as business credit goes, we get that question quite a bit for business credit. Is there such a thing as business credit? Because it sounds like it's mostly your personal credit score with your financial statements to prove, your financial health. But a lot of people come to us asking us, how do you build business credit? So does that really matter, or is business credit considered basically once your business has been established, is that considered like business credit?
Okay, the question has to do, is there a difference between a personal line of credit or credit score, and does your business develop a credit score or something equivalent?
Yeah, that's a fantastic question. We get asked that question a lot, actually. And really what business credit boils down to for small business is relationship with your bank. It boils down to history that you have with them. So, you've got to start somewhere, and so a lot of times where we start with business credit is having your deposit accounts with that bank and making sure that you keep your deposit accounts in order, that you're not always in the overdrafts. And then second, you go to business credit cards, small business loans, SBA loans, even auto loans. one of the things that we look at is, this customer, I can tell you what the credit memo says. It says this customer has been a customer of Extraco Banks for X number of years. They've had 3 loans in the past. All loans have paid as agreed. So that's something that, we look at to see, has this person, performed well in the past, and do we have a confidence level as we're increasing that amount of risk that we have with that customer, the exposure, the dollar amounts that we're handing out, do we have a confidence level that they have the ability to pay us back and they're going to figure out how to get it done.
So it sounds like there's not a sort of single aggregate score, but what you develop in business is a credit history, and it's the history that people look at. Another question? Yes, please.
So, piggybacking on what on her question about business credit, so the DUNS number doesn't play any role into getting a business?
So we look at that, but again, we kind of go back to the financials, the history that we have with that customer. I mean, it's definitely a measure that we can look at. It's definitely a data point. So whenever we're looking at a loan, we're aggregating a lot of different data points to make a credit decision. So we don't make a credit decision just off of one thing, one score, one item. We don't make it off of just a FICO score, just a DUNS number. We put all of these things together to say, yeah, this looks like it's a good risk for the bank to take. It looks like it's a good deal and something that we should proceed with. Sure, absolutely, yep.
If I could just add to that too, you hear a lot about, we've heard the word relationship, we've heard about, get a banker, get an accountant, have somebody that's there as a resource to you. Because part of this is that I know if I'm going to sit down with Jason, and every time I walk in to talk to him, it's because I need money, he's gonna, that pattern's gonna start to show up. But if I'm meeting with Jason a few times throughout the year and I'm talking with him about my financials, even when things are great, and I'm sharing about my business and what's happening and where the opportunities are, your banker or your lender doesn't know everything about your business and can never know like you should do. But there's some education that goes there to where how does your business work? How does it make money? And when you're teaching and educating them and not showing up every time just needing money, it's cutting a different direction. And I see a lot of small business owners that are wondering, well, why I didn't get that? And they're just going in because they have a need, and they need money next week to take care of those accounts payables and payroll, but they haven't done their part to invest in the relationship with that banker or that lender. So just another little piece to remind you in there about, it's a relationship. It's not something that's once a year or when you need money. You have to invest in it the same way you want them to, but they're here to help us. We have to take that first step as small business owners, or soon to be, or aspiring small business owners, and help build that relationship. Just don't forget that.
Great. I think we've time for one more. Yes, sir.
Wait, it's a governor's office. Wait, okay, hold on this.
Little surprise. Art, Jason's all done a phenomenal job. I just have a question. Where's the free money at? You all just want the blank check. So are there grants out there that I can just get without having to pay that? Floor choice.
I'll let you answer that one.
Free money. That is a challenge. If there was a ton of free money, no one would need to be in here right now, right? My answer to that is there are grants available. Great places to check, especially, really depending on what type of funding you're needing. But, cities can often help. Economic development corporations can assist with certain things as well. What I caveat with funding is all of the federal funding is at www.grants.gov. So, when I go there, I will try to look at times to help people find something. And those things are usually very, very specialized and earmarked for Department of Defense, green energy, healthcare. So it really just kind of depends on what you're trying to achieve. The problem I run if somebody's coming into me to start, say, a restaurant, I have yet to really find grants just for starting a standard type business. But definitely check with your cities. Sometimes they can assist with structures and things of that nature as far as build out and updating and economic development corporations. And then, like I said, grants.gov is where all your federal grants will be listed.
Yeah, I think it's a trap. I think we get so many people that call us and say, well, I'm a veteran, so aren't there programs to where I can get 100% financing and grants and things like that, or I'm a minority or a woman-owned business or, something like that. There are programs out there and there are grants and there are tools, absolutely. And for the most part, I think it's the wrong question. I think if you're starting out with that question, your head is in the wrong space to start with. Because the free money is sell that big house, lower that mortgage, get rid of the extra car, sell the boat. And I know I'm hitting a lot on personal financial here, but we've all said it. It is like that. Small business ownership and personal financials and how you approach that shows me everything. I mean, when somebody comes in and wants an investment, and we get that regularly, people want to invest in their business, I want to know how they live. I want to know what's going to come. What are they willing to do when they need that extra? Because if our household expenses are $10,000 and you can cut them to $7,000, you just found $36,000 of free money over the next 12 months. Start there instead of looking for a grant or something. And again, I know they exist. There's some great programs. We benefited from back in the very early days. We got one and helped through the SBDC of McLennan County, or McLennan SBDC. So they are out there. But if that's where you're starting, don't knock on my door.
This is where we're going to end. Right. Thank you, gentlemen, very much. Our time is up.